Tesla stock is down more than 6% today. So what happened? So here's Tesla stock walking. This is all self-inflicted, by the way. You know something bad is gonna happen. When you cut production, the stock falls inevitably. Self-inflicted. But why cut production in Shanghai as reported by Bloomberg and Reuters? You know what the stock is gonna do when you do that. So why do it? This is a row-row ship. A roll-on, roll-off ship that Tesla would need to book in advance to export all of the vehicles. You see, what Tesla was thinking, I believe, when they cut prices initially, they thought that demand in China is going to be extremely strong. But then they realized, we're not selling everything as we thought we would in China specifically, which, you know, China is facing a lot of issues right now. And surely Tesla could easily export all of the vehicles from China. That is no problem. However, these ships are huge. These ships do not just sit around in China, in Shanghai, waiting for Tesla to make a decision. Oh, are we exporting? No, we're not. Are we exporting? No, yeah, no. Like, we don't want to do that. Why have a ship sitting in the port doing nothing when it could make you money? There is a lot more to this, by the way, so let's start digging deeper. And by the way, as a long-term investor in Tesla, this does not worry me at all. Unless Tesla does not want to develop a cheaper car. I mean, the Model Y and Model 3, these two cars are incredibly expensive. First, this was reported by Reuters that Tesla is cutting production by 20% from the previous month. This is in Shanghai. This was also reported by Bloomberg, and I already talked about this on Saturday. Rob Mao from Tesla Daily reported on this rumor earlier already. Now, a Tesla representative replied, false news, without elaborating. And I don't like when they do not elaborate. When you just say false news, oh, come on. This is a big red flag to me. I mean, check this out. Tesla China says report claiming upcoming Model Y price drop is false, only to proceed a few weeks later to drop the price. I mean, please elaborate. What do you mean exactly by saying false? Do you mean that 20% production cut is false? Is it 19%? Is it 19.9%? I mean, technically 20% would still be false then. And just to be clear, long term, I am a super bull of Tesla, but Tesla China here is not doing a great job by just saying false news. Please be specific. Exactly give us the numbers. Are you cutting production? You didn't say. You didn't deny exactly we are not cutting production. You just said false news. What do you mean by that? Now also some point to Reuters and say, Reuters, you have no credibility because this did not come true. Tesla did not export any EVs from Shanghai to US. However, I do want to point out that the specific language that they used is considered. Elon replied to the story by saying false. So maybe the Chinese team brought that up to Elon and then Elon said, no. I'm not even going to consider this. Get out of here. So maybe Tesla China considered this, but Elon never seriously actually even considered it. And now we can see why Tesla China would have considered it, because now they are cutting production, it seems. While Tesla is growing, a PR team, I don't know how much it is needed. On days like this, it would be nice to have one in the US as well. I mean, all of the investors are basically in the US and Canada anyway, most of them. So that perhaps would make sense, but that is additional cost. I think a PR team starts to make a lot of sense when Tesla stops growing 50% year over year. Maybe when the growth reaches more typical growth rate that of a big company, then I think is the time to actually really do it. Right now, this presents more buying opportunities when someone is just spreading false information and we don't know which part of it is false. Tesla just said false without specifying it. So there's something false in there. it seems to me, but probably not all of it. Look at the sales growth in Europe this year. It's absolutely phenomenal and is tracking to be really good. And of course, Giga Berlin ramping means that the 10% tax that Tesla would have to pay, because before Tesla would deliver cars to Europe from China. Now, with cars made in Europe, we don't need to do that. So we get that nice little bit of savings there. So Tesla can cut prices in Europe without having any kind of hit to the margins. Let's talk facts. Fact is that Tesla just had an absolute record November. 100,291 vehicles. These are China deliveries plus exports. And the previous record was 83,000 in September. So this is quite a big beat. However, this is exactly as expected by Troy. This doesn't change any of his estimates at all. Here's a good chart I found that shows how many more vehicles are made and delivered in Germany. So this is specifically for Norway deliveries. You can see in sort of golden color here, these are all cars produced in Germany, no longer in China. We will only know for sure with 100% certainty what happened with production in January. So we'll keep an eye on that. There is still more to dig deeper, so let's do that. In terms of reducing production intentionally, not many reasons other than believe that you cannot sell those vehicles or you do not want inventory to build up further. Also, Elon said on the last quarter earnings call that he believes that Tesla will sell every single car it makes as far as we can see into the future. Now, that's a very generic statement. As far as you can see into the future, how long is that? He didn't specify that. So that's a big question that I have for myself. Now, if I was Elon back then, and I am looking at a price cut that we now are going to do, probably, I would assume that demand would really pick back up. But perhaps it didn't do as much as everyone thought it would. So it would be reasonable for Elon to make that statement back then, but now the information could be different. So we'll find out soon. By the way, we have to remember that Tesla has not entered every single market in the world, and also the standard range Model Y is not even available here in Canada and in the US. Also, a lot of people are not talking about this. This is from Q3 earnings report. See Shanghai right here? It says capacity is over 750,000. November production, or deliveries to be specific, of 100,000 means Tesla China has a run rate of 1.2 million possibly. This is huge. Troy specifically thinks that the production cuts seemingly are happening because Tesla doesn't have enough orders in China. The wait time in China is very low right now. And typically, we would not expect shipments to Europe until last 2 weeks of December, like James is saying here. Tesla is focused on the domestic market right now, which perhaps is not as strong. And the reason why they perhaps don't want to just build up the inventory is because they already did that in the last quarter. And the stock did not react very well to that at all. So imagine that again, but worse. So Troy is guessing that Tesla realized what's going on, that there is not enough orders around November 15th, which is a little bit late to book ships and the port. So probably Tesla has some ships booked for December 16th to 31st, but none for December 1st to 15th. And Troy also emphasized that if you can find the ships, you also need to book to gather the port with the ships. So you have to have both, and you have to book these in advance. We'll know very soon exactly how many vehicles were exported in November from China. Once we know that, if a number looks good in terms of there were a lot of sales, let's say domestically within China, when we know, okay, demand is strong within China, that would be very good. As a long-term investor in Tesla stock, what do I make out of all this drama? Ooh, it's a lot of noise, isn't it? Well, one major thing to consider is number one, Tesla Model Y and Model 3, these cars are very expensive. These are luxury cars. These are not economy cars. Tesla is taking market share away with these two luxury vehicles from Toyotas and Hondas. That is preposterous. They have to eventually move on to a cheaper vehicle. That will happen. So if Tesla releases a new car like that and the demand is not strong, then I would be concerned. But the main reason why I only hold Tesla stock in my stock portfolio is that just with all the deliveries and production over a long period of time, just with the car business alone, I believe I will not lose any money. And full self-driving is what I am really betting on. This is where I believe I will make at least 10x on my money. Because when full self-driving gets solved, that's when we can see robotaxis and everyone buying full self-driving. Imagine this, if you sell a $20,000 car and Tesla full self-driving option costs, let's say, $20,000, just to keep math super simple, how big are your margins? The numbers get so ridiculous, it boggles the mind to really look at these numbers. So I just say, Tesla stock, I believe, will 10x. That's like, if you look at the numbers, that seems to be conservative, assuming that Tesla will solve full self-driving and that goes smoothly. So because I am betting on full self-driving, I am not worried at all, and I am not expecting to make money on anything else that Tesla does. That is, everything else is just an insurance policy for me to not lose money when Tesla scales eventually to more than 10 million deliveries per year. However, if you do not believe in full self-driving at all, if I did not believe in that, I would be worried. See, Tesla still has so many ways, long-term is not why I'm worried. Tesla has so many ways to reduce costs that long-term, this is not worrisome at all, even if that results in, let's say, a few bad quarters temporarily before Tesla releases a new car or really reduces their current costs. Now, for those who are really concerned about Tesla's demand, here's another thing to just think about. Politically, importing cars from China to US, I don't really see it. But importing cars from Europe to US, that's a little bit different. And we already take cars from China to Europe, so that one we know is no problem. But taking cars from China to US, that is questionable. But we can do these sort of, workarounds if we really have to. I mean, we know that demand in US is going to be so strong with that $7,500 EV incentive. But of course, if EVs made in Europe cannot get that $7,500 credit, then that would not be exactly great. If you are a new Tesla stock investor, Tesla for a long time managed all of the supply and demand across regions. So this is nothing new. And I believe long-term Tesla will be just fine, which is why I only own Tesla stock. You will find 48 reasons right here. My name is Matt Postis. Thank you so much for watching. Like and subscribe if you haven't yet, and I'll see you later today.